Stocks on Wall Street heading mostly south Thursday afternoon, although the Nasdaq is bouncing back ahead of a slew of earnings from the big tech titans. Let's get some perspective on the tech stocks as well as the prospects for the market from Doug Flynn of Flynn Zito Capital Management, joining me from Garden City, New York. Good to see you again, Doug.
See you, Fred.
Same here. Jobless claims. They rose for the second straight week, and quarterly GDP shrank at a record rate of nearly 33%. What does this say about the state of our economic recovery?
Well, I think it's within what we expected. You know, last quarter we were down 5%. You add in the negative 33, and we have to remember that that adds up to 38, but it's annualized. So it's about a 9.5% total drop in real GDP. And I think that's within the range. In fact, in some cases, it might even be lower than what we were expecting. We were expecting a little bit more than a 10% real number. So perhaps this is a little better. But the real good news is that the numbers that were coming in advancing for the next quarter have already rebounded significantly. And the estimates are anywhere from positive 13 to positive 19% annualized, which would get us possibly almost half of the way back. And that's the easy part. It's the next half that we're going to have some trouble getting back.
And Doug, this afternoon after the bell, the big tech titans whose CEOs testified on Capitol Hill yesterday, Alphabet, Apple, Amazon, Facebook, they come out with their earnings. What should investors or traders do at this point? Should they take profit? Should they buy stocks ahead of it? We noticed the stocks open lower, but now are trading higher right ahead of the earnings.
You know, the tech stocks are clearly taking advantage of this movement and the shift to everyone working from home and all the other stuff that's going on. And while that eases back somewhat, they're in a good position. The problem I have is not that there's anything inherently wrong with any of those companies. It's just that they make up such a huge percentage of the market. Overall, tech is 25%. I mean, the top three holdings, the top three positions are one out of every $6 in your S&P index fund. So it's a question of if you own that and then you own some of these outright, how much of it can you possibly own before it's too much? And there's a huge divergence between these growth and tech stocks and the value in all the other areas which have severely underperformed, so much where that range is wider than I've ever seen. So it might be early, but there's some opportunity there. And I guess what I'm saying is I don't know that I would just keep buying and buying if it's already a fair representation in your portfolio. It's time to look and find some other areas that haven't gone up like that.
All right, before we talk about the other areas, what would you consider to be too much exposure? I mean, just alone the four companies that are reporting today make up 16% of the S&P 500. What would you say is too much for a personal holding?
Yeah, you know, I always look at the S&P. Okay, so one out of every $4 in the S&P is in tech stocks. If you have that plus more, and you look at your portfolio and you're pushing a third or more of every invested dollar you have in technology. Now, granted, you might be comfortable and familiar with it and the outlook is good, but it starts to become too much. It's already the single largest sector of all the 11 sectors in the market, and I just like to buy things that are a little out of favor, that maybe have different prospects. It's not that this is going to turn around and go badly. It's just that you want to diversify. We've heard that a million times. And so those are the areas that you want to sort of look at and say, hey, do I have too much of this? It's not a sell. It's just that maybe my next dollar investing should look at some other areas.
All right, so I guess keep it in line with the exposure on the S&P 500. So what are those other areas that you were talking about? You said if you're going to add a dollar, buy these stocks instead.
Right, so we have the election coming up, and you have to know that depending on, well, healthcare is a great opportunity in that as one example. It's done well, but not nearly as well. I'm a little concerned about energy and some other areas that have really gotten beat down. Financials have gotten beat down, so sometimes you don't want to chase the one that's gone down. But, you know, if you already had that, perhaps adding into those selective names are the way to do it. And if you can't do that, then indexing is fine. But I would look to areas like that have some good upside opportunity. Certainly healthcare is one of those, and one that hasn't gone up nearly as much as technology.
Thanks a lot, Doug, for your tips.
Absolutely.
Our thanks to Doug Flynn of Flynn Zito Capital Management. I'm Fred Katayama in New York. This is Reuters.